NordVPN is becoming more than just a VPN. Threat protection will guard your device against malicious websites, malware, trackers, and intrusive ads, even if you're not connected to a VPN server at the time. Step up your cybersecurity and stay safe.
Now, if you want to preserve your security and your privacy, go check out the Apollo wallet, which I think is the most secure wallet going. Use my affiliate link for a discount. So, Chris, thank you so much. Thank you. For anybody who does watch this, because when I post the clean version, I am with Chris Terry. Chris is from the BPSAA, the Blockchain Privacy Security and Adoption Alliance, bpsaa.vision. I'll have the links in the description below. And they are an association of projects that collaborate to promote privacy, security, adoption, and alliance. It includes Pirate Chain and Sentinel and Etho Protocol, and the newest member is Zano. Do you want to say a little bit about the BPSAA, Chris?
Sure. We started as a founding member at Etho Protocol, which I've been part of for a long time. The idea was just smaller projects to have a voice, right? Obviously Monero gets a lot of noise, Bitcoin, Ethereum, all the big projects, but the innovation of the space is the smaller projects. And actually Pirate Chain, it was Turtle, Etho, Pirate, I think Sentinel were the 4 original members. And we all got together a couple years ago saying, boy, we'd like to have a greater voice. How can we kind of be the best housekeeping seal of approval for crypto because of all the rug pulls and scams? How can we make sure that people that are part of our association are good projects, good quality, try to advance what we believe the blockchain and cryptocurrency technology brings, right? Which is transparency, decentralization, lower costs, and best practices so people can really understand and take advantage of this. And the BPSA's message is to try to get and be educational and get the news out. It's all grassroots. It's all voluntary. Nobody gets paid anything. We all, donate our time. And I think we need to get the message out there and cover topics like today to let people know what's really happening in the space. And we're trying to team up together to have a louder voice, right? That's really what we're about.
Yeah, and that is something I say to projects that I encounter. Say, listen, with the BPSA, you get a very large social media footprint.
Yeah, it's over 500,000 members when you take our 5 or 10 projects, we're 12 or whatever we're at now, and all the Twitter followers together, it's 500,000. So yeah, it's we started with maybe 5,000 or 10,000. It's grown quite a bit, and we're continually evaluating new projects. We just brought on Zano the other day. We're excited to have them with us. And so again, we probably bring on a project every quarter or two. We scrub them, make sure they're good people with good technology, and then we bring them into the family.
Yep. Very good. And I do cover some of those projects. And actually, I speak to other projects that aren't, and I say, listen, you should go and apply for the BPSAA, because then you get to collaborate with other projects that have a similar vision as yours. But in this video, we're going to be talking about what's happening in the world of crypto, in particular, the US government, because you and I know how much central bankers and governments, they just love the idea of decentralized money.
Yeah.
Well, actually, what they love is, how can we get a cut of this? How can we get a cut? That's what they really, really love. So do you want to say something? Actually, before I do that, I just want to say to people, look, please subscribe. Follow me on Twitter, CryptoRichYT. Subscribe to me on bit.ly/CryptoRichOdyssey, a censorship-resistant platform. Support my work there. I post stuff on Odyssey that is far too controversial for YouTube. Okay, now we have one person watching. Thank you. More will come as my channel will grow, as you share and spread and let people know about this work. But what is it you and I are going to talk about, Chris?
I'm going to do, if I can do a screen share here, I'm going to grab a screen right here. We should be going live here. You can see this. This was published a couple weeks ago, 3 or 4 weeks ago. And the White House puts out, today's topic for everybody, by the way, is going to be very US-centric, even though the BPSA is an organization of a global nature. But obviously, the United States does still carry a lot of political weight and economic weight in the world. And President Biden came out with this report the other day. And if you just go to whitehouse.gov and you go to economic report of the president, you can Google this, obviously, and find it. You're going to see all these reports that are put out by every president every year. And Biden put out this report here on 2023 a couple weeks ago. And you can see it's 513 pages.
Oh my God.
513 pages.
All right, Chris, stop. Because straight away, this occurs as far too dry. We want to let people know that what we're going to be talking about here are what the US government are proposing with regards to crypto regulations. And although it is about the US, because of the economic power of the US, chances are many other countries are going to be aping or doing similar stuff to what these regulations are proposing, should they go into effect.
Agreed. So my point was that in this 518 pages, Section 8 is all about cryptocurrency. What I've decided to do is I've gone and I've ripped out that section here. Hopefully, Rich, you'll see it. And I've subtracted this particular section, which is section 8 of the report. And I've got this PDF. And what I'll do, Rich, is when I'm done with this, is I'll give you this and you can post it, or we can post it for download. And what it is here is it's section 8 of the report, which is digital assets, relearning economic principles. It's from page 237 to page, just about page 270 something. So it's about 40 pages. And what I did is I ripped out section 8, digital assets, relearning economic principles. And I'm kind of doing what we call here in the US the cliff notes of this. Yes. I've read all these pages and I've highlighted sections of this that I think is really interesting and that people need to know about. And what I think is even more exciting is, and I don't want to say where it is, we're going to save that big announcement for the end of the presentation, is that in this chapter, it outlines right in black and white what the United States is going to do for cryptocurrency. The policy has been published for everybody to see. Everybody's guessing what's happening with the US, where are they going with cryptocurrency. They actually put it in black and white. And I'm shocked that more people haven't taken the time to read this. I guess if you bury, 40 or 50 pages in a 500-page report of propaganda, of economic propaganda by the US president, nobody's going to read it. But I went through this and I found it interesting. And so I just wanted to kind of do the cliff notes so people don't have to read the 500 pages or even read the 40. They can narrow right down to this section about cryptocurrency in the United States government and talk about some of the things. And of course, what's fascinating is that this report was released like 1 week before the bank collapse in the United States, before Silicon Valley Bank collapsed, before Silvergate Bank collapsed, before Signature Bank collapsed, First Republic Bank in California, and actually there's probably, I did some research, another 168 banks representing, depending on the numbers, between $300 and $600 billion worth of collapse hanging in the balance. Wow. So they put out this big report about how bad crypto is and how great our banks are, and literally they published it the next week, our banking system almost collapsed. So it goes to show you that this report is pretty bad. Now, of course, it's easy to bang on the U.S. government and it's easy to be anti-establishment, and we're all crypto people. But recognize people read this report in the mainstream media and the news, and they say, well, it's from the president, so therefore it must be factual. And what we're going to find out in this report is there's nothing factual at all. It's absolutely FUD for crypto. It is 8 or 40 or 50 pages of FUD. The entire concept here is only to introduce FUD about crypto, and then they talk about why that is and what the economic plan is. So we're going to rip through this thing.
That's a really important point, that it is FUD about crypto, because I've been thinking pretty much every single thing, every major issue, especially the last few years, becomes so clear they're lying to us. They're misrepresenting, they're omitting, like the Ukraine-Russia war, like the COVID injections, like lockdown, like masks, like the lie of fractional reserve banking, that it's actually money, like the lie of formula milk is as good as breast milk. All these lies, like the lie of school being designed for education. So then a lie here that somehow crypto is much, much worse than fractional reserve banking. Well, I suppose crypto is worse for the banksters. It is much worse for the banksters, but it's actually better for people.
So anyway, they talk about this, and it's funny. They talk about cryptocurrency, and they date back to 1907 when we had our first big bank collapse prior to the Federal Reserve, which was founded in 1913 by J.P. Morgan. And the very first thing that comes out here is they talk about a 1907 crisis. The panic was mainly caused by trust companies, which are state chartered entities. By the way, all the banks in the United States are state chartered entities, competed with banks for deposits because the trusts were not part of the central system. They processed small, blah, 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 blah. And believe this, to earn profits, they made as many loans as possible. Well, what do banks do now? They make as many loans as possible, right? That's exactly what banks do. And the banking collapse is when basically the demand deposits are not available when people ask for their money back. So they start talking about how cryptocurrency is bad because you can look back on the banking system and banks act, and they also talk about how banks made loans to make a profit.
And actually, Chris, just to amplify that, they make loans at low interest rates in order to make more loans.
Anyway, so the very first paragraph is talking about banks making more loans than they have for profits. In 1907, how the Federal Reserve was invented to make a better system in 1913. Guess what? Banks still make loans for profit with more money they have. It's called fractional reserve banking, and basically the entire globe uses this banking system. This is not an American issue. It's Europe, it's Japan, it's China. Everybody uses fractional reserve banking, but they frame it in such like the Federal Reserve fixed this problem. Right. And again, this was released before the banks collapsed a week later, right? So good timing. So it starts out in the very first paragraph completely absurd. And let me read here. I've got some notes here about this one. It says it's being argued crypto assets provide other benefits such as improving payment systems, increasing financial inclusion, creating mechanisms for distributing intellectual property, financial value, bypassing intermediaries, extract value, blah, 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 blah. So far, crypto has done none of this.
Huh?
What? So they make a statement here, and then they say at the bottom, we've not done any of this. We haven't decentralized. We've not made better payment systems. We've not lowered barriers of entry where you could open up crypto without any ID. You could be completely unbanked. So they make a statement, and then they say crypto hasn't done any of it. Again, it's just absolutely, I'm going to try to keep my four-letter words to myself.
We're at Odyssey. You can feel free.
I know, but still, a little bit of decorum, Rich. So, and then they start getting into the FUD with physical environment and mining, right? And for all you people that talk about that and you say, oh, cryptocurrency, primarily Bitcoin mining is bad. Have you ever thought about how much energy it takes to run the traditional financial system? Bank of America, the United States, I think I looked it up doing this research. Oh yeah, there's 4,000 banks that have branches in the United States. 4,000 physical branches. They all have air conditioning. Everybody drives to work to go to the branch. They have to have security. They have to mow the lawns for the branch. They have to do gardening. They have to take the blowers with, and all this other stuff. And so to say that Bitcoin is bad for the environment.
Oh, Chris, there's more to it.
Right?
I've covered this, and I've spoken to friends of mine who aren't into crypto, and they say, well, Bitcoin's really bad for the environment because it uses up so much energy. But you're just talking about the bank branches, 4,000 bank companies, right? With all their, I don't know how many hundreds of thousands of branches, and all the energy that goes into building them, into running them, maintaining them, driving to and from, but also the network, the ATM machines, all the stuff you've got in the back end, the data servers that they use, right? The data centers for all those transactions.
Sure.
And then this for me is the biggest energy cost of the fiat banking system, that it allows governments to press a few buttons, print currency, use that currency to pay weapons manufacturers to build bombs that they fly across the world to drop on other people.
Rich, you're getting off topic now. Let's get back on topic here. But by the way, what I love here is the next
sentence. That's real environmental destruction.
Yeah. Innovation has been mostly about creating artificial scarcity in order to support crypto prices. Well, I think the fact that Bitcoin's at 21 million and their scarcity is better than the US dollar, which you can print by the trillions. Again, it's just this report. If you tried to make a Saturday Night Live skit about crypto, you couldn't make it as bad as this report. But again, it's from the president, right? I think we're only like 2 pages into this. Now they actually, believe it or not, some of the things that report some general topics for people that know about crypto, they did a fair job. I'm not going to sit here and say that they absolutely did a horrible job. Mm-hmm. They get into talking about how digital assets and the central banks. Oh, look here, they got CBCDs here in the middle here. And they talk about that. You can read all this yourself. They talk about Biden's executive order. They talk about capitalization. What are the functions of money? And some of this is kind of interesting. Talk about the history of money, what money's being used for. I've highlighted a couple sections here. It says here that I have my notes to the right, by the way, and when I share the PDF, I'll share it with my notes. Mm-hmm. And please note that my notes that are internal to the PDF are my talking and thought notes. There may be typos in the notes. I'll share that way, but recognize that my notes are just my rambling thoughts as I went through the document. It says the system worked well. It's going to become a common theme for many banks would earn higher profits by issuing more paper currency than the amount specified held in their vault. I mean, nothing's changed, right? Nothing's changed. This was interesting here. Talking about faith. Institutions have faith in crypto. Institutions and faith in currencies, particularly U.S. dollar, became enough that the specie was needed to assuage investor concerns about what was backing the currency. This led to the creation of adoption of fiat currency, or currencies based by the government that's not redeemable for specie. The fiat currency, I hope I'm pronouncing that right, specie. Fiat currency value is largely a function of the currency being the only instrument in which individuals can pay taxes, strengthen the government's institutions as a legal system and the military, and share social trust. So what backs the US dollar? They spell it out. Currency being the only instruments which people can pay taxes. By the way, in Miami, Florida, you can pay your taxes in Bitcoin, right? And there are other states now in the United States where you can actually pay with Bitcoin. So that number one, maybe for a federal level, they don't take Bitcoin, but states and municipalities do. The strength of the government institutions, understand that, legal system, and the military. Often you hear people say, well, the dollar's backed by the US weapons, so if you don't take our dollar, we're going to kill you. I don't know exactly what that phrase is, and I know people say it's because of the military strength. And then
I have heard that argument. I mean,
yeah.
Saddam Hussein wanted to sell oil for euros. So it was the US military that went in to ensure that, no, you don't do that. You still sell it for dollars. Now, Chris, can you just carry on for a second? I've left the door open. I'm just going to close the door.
Sure. So it's interesting enough why Rich just said, talking about the US military going after Saddam Hussein. We just, as you well know, about a week and a half ago or 2 weeks ago, the Saudis now are going to start taking Chinese renminbi for oil, right? So, and I doubt we're going to go bomb Saudi Arabia because Biden is pissed them off enough that now we're starting to alienate the petrodollar, and that's already sliding. And by the way, France announced last week that the French petroleum company Total is now going to be also clearing transactions in renminbi. So the idea that the U.S. for oil and petrodollar, which is a whole other topic, Rich, that we could work on, is starting to slide. And then finally here, section 3, it says shared social trust in the value of money itself. Well, Bitcoin certainly has that, right? So Bitcoin has everything but the military. So interesting point here about currencies. And by the way, I really apologize for speaking fast, but we've got a lot of material to cover, and I'm trying to hit the highlights here.
Sure.
They talk about this uniform commercial code. This has come up in the news lately, by the way, about many states now trying to change the Uniform Commercial Code because it's a state-based system. So in the United States, we have two sets of laws. We have state laws and we have federal law. Often people think it's the same. It's not. It's actually quite independent. And many states now are passing laws by Republican legislatures to basically make a CBDC illegal in the state. How that's going to work, I don't know. I have no idea. I think it's rather preliminary, more political. But they do talk about that. And so they talk about the UCC in the United States and basically our laws for money. For example, I know the UCC, and I don't know if it's Utah or Colorado or the western states of Wyoming, where they say that gold and silver can't be used as currency, right? It's legal in that state to use that.
And I saw something in Zero Hedge today. I think Texas are going to create a gold-backed digital currency.
Maybe. I don't know. I can't keep up with it all. They talk about Zimbabwe's case here. I'm sure that my note here was talking about countries like, for example, El Salvador and others replacing the US dollar by starting to go to Bitcoin, right? So they talk about things here. In Zimbabwe case, conservative firms shifted for white sovereign currencies, which affected the Zimbabwe currency, and they went to dollars because they inflated it. Well, maybe Zimbabwe is a model we ought to look at for what we're doing here, in the United States. And again, Europe's printing, Japan's printing. I think the Chinese are printing. So this isn't something that's unique to us. But what I think is funny is they make these examples, and all you have to do is look what we're doing. It's the same, right? We're not making this up. It's here in writing, right? You just read the president's report, and I find it shocking how contrarian a lot of this information is.
Before you go in, can you I should have asked you earlier. Can you expand? Can you magnify the page so it's wider in the window?
Yeah. This is an interesting statement here. Bitcoin is capped to ensure each remains of the assets will reproduce forever. If they had no value, if there was a limited supply.
Like the dollar.
What the F? Right? I mean, again, this is the president's report, right? The president's report talking about that if you had a limited supply, there'd be no value. Right there. Yes. Do they read their own material?
And earlier on, they were saying that one of the things that's wrong with it is the artificial scarcity. But that's what makes gold and silver valuable. Well, it's not artificial. We just can't get past it.
It's really quite something. Crypto assets could be investment vehicles. Let's see what it says here. Hence, depending on the risk appetite, investors might crypto assets will open quick money. Some have argued crypto assets serve as a hedge against inflation, hope their value keep pace with rise of inflation and more. Very interesting. They talk about the cryptocurrencies could be hedged against inflation. Well, if you look obviously at the trajectory of Bitcoin since 2008 to where it is today, the ROI is through the roof. But the one example I like to use with people that don't understand inflation, and I think this is so easy, and I use this a lot with, let's say, non-coiners, is I said, let's think about this. I said in 1972, the U.S. came off the gold standard, right? If you had $70 in 1972, an ounce of gold was 35 bucks. So you say, all right, I'm going to take $70 and I'm going to buy a single 1 ounce gold coin and I'm going to put it here on my desk. And then I'm going to take a 20, a 10, and a 5, and that's 35 bucks. I'm going to open this little safe in my closet and I'm going to put the gold coin in the safe and I'm going to put the $35 in the safe and I'm going to close the safe. That was in 1972. You open that safe today and what comes out? A gold, a 1 ounce gold coin and $35. What is the 1 ounce gold coin worth today? $2,000. What's the $35 worth today? $35, right? So it goes to show you, talk about inflation and the idea about trying to keep it. The deflation, this 2% targeted rate is, as they often say, is a tax on people. And because it's like you're boiling a frog in water. If all of a sudden that devaluation happened in 12 months, we'd all feel it. But that happened over a course of 50 years or whatever it is, you don't. But it happens every day. So this idea that people hope that maybe cryptocurrencies might be a hedge against inflation. Well, I know one thing, the dollar is not something you want to hold against inflation, right? They devaluate it on purpose. So I don't know how they could say that crypto could not serve that. Certainly, if you look at Bitcoin, it's not only been a hedge against inflation, it's been a fantastic return, right? Yep. So again, it's interesting they put these statements in this report because it's so obvious that what they say is not the case. I mean, even to an idiot, you can understand this hypocrisy of the document, right?
Yep.
This I highlighted in green. I thought this entire, let me zoom out here real quick. This entire thing talks about here. Let me see what my point was.
A bit more.
Yeah, no, I'm just reading it. I'll zoom in a second. Yeah, this was fascinating here. It says, value money. They talk about just this whole thing here, talking about signerage and about cryptocurrencies distributing profit and making money from mining and all that, and how a government can make money. Basically, this paragraph says how a government makes money by printing money. That's what it says. They make money. It's profitable to print money. That was my point here. Yeah. For some reason, I didn't put it in my notes.
But Chris, that makes perfect sense. Supposing you, Chris, you discovered alchemy. You could magic gold. You got the formula and you were able to create gold. That would be so profitable for you.
Yeah, right.
Not for anybody else, just for you. So what they're actually saying is they benefit from the Cantillon effect, which is distorted with fractional reserve banking. And those that don't know Cantillon effect, those that are nearest the spigot of money have the greatest advantage.
I'm updating my notes here. So here it is. It's the idea that it's profitable to print money. Well, yeah, I suppose. You're not creating value though, right?
No.
You're not creating value. All right, let's continue here. Let's see. I think they're talking about, assets as a speculative investment. I think nobody's going to argue that. This box here, this section 8.2, how Bitcoin works. This is actually, I think, they did a pretty good job. They don't specifically get mining right. They don't talk about a lot of things. But for the U.S. government to try to summarize, let's say, the concept of Bitcoin, to try to give some positive aspect of this paper, I thought this section 8.2, for a first stab, they did an okay job. They talk a little about hashes and all that kind of stuff, and not too bad. Maybe we're going to get through this faster than I thought, Rich. Let's see here. Volatility. I don't know why I've got this outlined here. Oh, yeah. So they're talking about here, this section here is inflation in global, increases globally in the second half of 2021-22. Price of crypto collapsed, providing to be at best an ineffective inflation against inflation hedge. So here they're talking about, this was right at the bottom of the crypto winter, right? Bitcoin went down to 15,000. It went from 68,000 down to 15,000, right? We all know Bitcoin, it's up, it's down 80%, it's up, it's down 80%, it's up, it's down 80%. What are we in phase 4 of this typical cyclical environment for what it has? We're coming up on the halving again. And of course, now it's at 28,000. Literally, Bitcoin has almost doubled since they printed this statement. But again, they take a snapshot in time, they drill down on the specific topic and says, look here, we told you Bitcoin's worthless, cryptocurrency is worthless, they've crashed, it didn't work. The statement
versus if we look at the whole history, like if we look at the value of Bitcoin when it first launched to now, and even the value of Ethereum, I think it was 10 cents in the ICO for Ethereum.
I think it was less than that. I think it was a penny or something. I don't know.
But anyway, right? It was cheap, and you look at it now. That's done pretty good. Same with Monero. Same with Litecoin.
Yeah. So, but I love this sentence. As inflation increases globally in the second half of 2021 and 2022, the prices of crypto collapse, provided be at best an ineffective hedge against inflation. Well, I suppose you could, again, it's Bitcoin's out of context.
Bitcoin's the best performing asset of 2023.
Yeah. It says here that cryptocurrencies are not effective as US dollars a medium in exchange. Well, that's yet to be seen. I think what my note here was, it says the strength of US dollar is derived from several important factors such as faith in government, legal system, but cryptocurrencies lack these. I would say at this point in time, the lack of faith in the US dollar is gaining steam, and the faith in Bitcoin and crypto is gaining where the US dollar is losing. So the faith is not an argument I think that they should be using on their side, right?
No, I agree with you. But also the faith in the legal system. And we talked about this before we started recording, and I'm going to be naughty and mention it. But the indictment of Donald Trump, the faith in the legal system is fading. How about indicting Joe Biden for the material on the laptop with Hunter Biden? My opinion, right? Not yours.
That's another show.
It's another show, right? But anyway, but also what they don't say, they make no reference to, is the strength of Bitcoin as a decentralized asset that doesn't allow any single party to bias, to weigh it in its own favor.
Yeah, well, again, this discussion today is not a pro Bitcoin. It's to pick apart this report. But yeah, I agree. And again, the benefits of having and I tell people my Bitcoin speech to non-coiners, right? Now we're getting off topic. I apologize. But Bitcoin, first of all, it transcends all religions, all faiths, all sexes, all languages, all borders. There's no sovereign control. It's the first global currency, and there's no impediment to adoption. Anybody can have Bitcoin anywhere, right? Yeah. This whole idea about what you can and can't do with your money and all these things. I mean, it's easy for us to be able to pick this apart. But now they did say here, and I thought this. I'll give them this. Cryptocurrencies experience substantial amounts of volatility, not stable stores of value. That is true. They're not. But I don't think anywhere does anybody in crypto say that they are.
No.
Right? I mean, I guess a stable coin. And they do get into Luna, by the way, later on in the document here. But, they make this statement like saying that anybody said, well, cryptocurrency is here to be stable. Well, there are stable coins, and one of them did fail spectacularly. We know that. But the point being is they kind of paint the broad brush. Oh, you can't. All crypto's bad because it's not stable. Well,
but just on that, but the stability is a function of the amount of money in it. Bitcoin has got more stable as more money has moved into it. Silver, traded on the foreign exchange, is way more volatile than gold because it's a much smaller market. That's all. So, you have altcoins that are way more volatile than Bitcoin because they're smaller markets. It doesn't take so much to move them. But with adoption, the volatility will decrease.
Fair enough. But my point here is that they're basically saying that cryptocurrencies are bad because they're not stable. Well, I don't want stable gold either, right? Yeah. I want it to go up. If I owned oil, I want oil to go up, right? So yeah. I think it's kind of a false flag, I think is my point. What else here? It says cryptocurrencies do not have fundamental value, but that's not a requirement for them to function as money. In fact, sovereign money does not have fundamental intrinsic value. Here they say even sovereign money does not have fundamental intrinsic value. Yep. It's interesting, right? So they say, as mentioned above, most cryptocurrencies do not have fundamental value, but that is not a requirement for them to function as money, okay? In fact, sovereign money does not have intrinsic value. What the F? So you're right. Cryptocurrency, this is the president's report. Again, understand who wrote this, the president. So cryptocurrencies do not have underlying fundamental values money, but neither does our currency either. So don't worry about it. All good.
You can see anything like cryptocurrency doesn't ride around in unicorns, but neither does money, a sovereign currency.
By the way, that's an excellent analogy. I love that, Rich. But, obviously Michael Saylor would argue about Bitcoin and energy, right? He'd say it's an energy-backed commodity, right? And funny enough, the dollar with the petrodollar, which is now dissipating, was also energy-backed, right? We kind of had a commodity-based, indirect commodity-based, but certainly Bitcoin is directly related, right? So you could say that it's a store. His argument that Bitcoin is a store of energy is quite unique, right? So,
but I would say the same about gold and silver because it takes energy to access them, to create them. The dollar takes no energy. You just press a button and you can counterfeit it. Gold
Yeah.
and
Well,
silver.
anyway,
And
I look. I think the point here is, I think this is probably. I'm going to recolor this entire statement in red, right? Because what they say here is
I think it should be
exactly.
rainbow colored. This one.
Yeah, what they say here is exactly what. Yeah, our cryptocurrency doesn't have any intrinsic value, but neither does our dollar, right? And then they say the main reason for the value of sovereign money is trusted institutions in the central bank. Has anybody fucked up money more than the central banks? Really? When I went through this document the first time, I'm shaking my head. It's unbelievable, right? Anyway, everybody that's a cryptocurrency person needs to read this, right, and reference it during discussions, because this is published, the official doctrine of the United States government on crypto. Here we get into the FUD, right? The mining thing.
8.3 for the impact of fiat currency creation on and the military.
Yeah, this is the global warming people and the environmental change people. They got to throw that in, right? This is all part of that political doc.
Notice how the and I'm going to hijack a little bit, right? Get my political points in, Chris, right? But notice how you never hear anybody in the climate change agenda talking about the environmental harms of war. We don't say, "Oh, listen, we have to stop flying planes across the world to kill people because it releases more carbon dioxide emissions."
Look, all you have to do is look at the ramp at Davos when everybody flies in. More carbon emission is emitted there with those 400 jets that flies in than 100,000 freaking cars or whatever. I mean, give me a break. It's all bullshit, right?
Yeah, it is.
So here they talk about cryptocurrency is a risk to the environment, and they talk about how bad Bitcoin is, and that typical blah 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 blah. Oh, by the way, I love this. By the way, tremendous noise pollution. I know that I live right next to a huge Bitcoin farm, and a lot of people have them in their neighborhood. I've never heard of people complaining about noise pollution from a Bitcoin farm. I'm sorry. I haven't heard that one. This is a first. The reason why you don't want to mine Bitcoin is noise pollution for the residential neighborhood. Rich, you have one of these downstairs in your place in London? Or is there one there?
No. Instead, what I have is the depleted uranium that the US spreads around the world.
Yeah. So there's also
environmental harm of that.
By the way, the mining rigs have a lot of water pollution. Not sure exactly where that comes from. I don't know how a mining rig has got water pollution. I guess I don't know. This one I can't even make a joke about. I have no idea.
No. What can you say?
This was interesting. They talk about Colombia. They take, again, a very, very finite thing. So we have some hydro energy in the United States, right? Quite a bit. In the northwest part of the United States, Washington, Oregon, obviously the Hoover Dam, right outside of Las Vegas. We have some hydro energy plants. And they talk about up in the Columbia Basin, which is on the Columbia River to the east of Seattle, is a beautiful river. And they got a bunch of hydroelectric dams by Spokane and all that. Is that these people are paying like 2 cents a watt. So the mining company said, Jesus, son of a bitch, let's go ahead and go there, right? So they put in a mining facility because they had cheap electricity. So, people were responding, and because it doesn't have water pollution, and it isn't a car factory for General Motors putting out all sorts of petrochemicals and shit, the people there said, yeah, sure, put the mining farm in here because it actually is clean. Mining Bitcoin is clean, and the energy's clean, so it's completely clean, so people are not worried about the fish. Even though if you read the report, there's water pollution from mining. I don't get it, because believe me, if people in the Columbia River thought there was pollution going in the river, they wouldn't allow mining. And then they talk about how the prices of electricity went up 30%, and it was bad for the poor people that were only paid 2 cents a megawatt. I'm like, well, guess what? That's what happens. And then they talk about the e-waste of the miners. There's e-waste in everything. The stuff gets recycled. Again, a false flag. All that stuff is recycled. This was interesting here. It would estimate it would take as many as 114,000 Visa transactions to generate the same amount of e-waste as a single Bitcoin transaction. So they're trying to say that the centralized Visa transaction and what's happening with the Bitcoin block, but they're talking about the electricity that you take to probably process that exact Visa transaction, not the Visa system. Once again, mixing apples and oranges. If you take the energy to run Visa card worldwide and all the terminals that are connected, right? Bitcoin, you can use your mobile phone, right? You don't need a terminal or anything. All the electricity, all the telecom, everything else, they don't include that. They're talking about a specific mining energy against a Visa transaction processed at the Visa server for 1 second at a time, but they don't take the entire ecosystem. Again, no apples to apples. It's apples and oranges and making a false assumption based on the transactions, right? Again, it's very selective referencing here. This, I think, was great. The profits from the issuance of sovereign currency benefit taxpayers by lowering tax needs as central banks effectively return these profits as government revenue. We print money to lower your taxes, so it's good for you.
No. You print money and you're robbing my labor and devaluing the value of the currency that I hold because it loses its purchasing power.
No, it says right here that the profits from issuing sovereign currency benefit taxpayers by lowering tax needs. We print money to pay the taxes, which is good for you.
Okay, this is so upside down. This is so upside down, twisted thinking. This is so, because I think you agree with me, inflation, the issuance of, which is the increase in money supply, is a stealth tax.
That's not what it says here. It says here that this is good for you. As central banks effectively return these profits as government revenue. By printing money, it's revenue for the government. It lowers your tax. It is wonderful. This is insanity. This is insanity.
These are the geniuses that are running economic policy.
It's insanity. It's printed.
Yeah.
We're not making this up. This is the official doctrine of the U.S. government, right? Oh God, now they're talking about stable coins here. Let me see what my notes are. Yeah, so here they talk about this, and they get into, by the way, I'm going to try to take the next section on stable coins and try to paraphrase it because it's several pages. And they go and they talk about Luna. Now, we all know that Luna, okay, was based on an algorithmic stablecoin, right? Mm. And it got out of whack and it went bad. I know because I lost a lot of money, but I knew the risk.
Yep.
You know, when I was an anchor and I had Luna, we all knew that you don't get 20% forever without some risk. I didn't think it'd unravel that fast, but hey, guess what? You play with the big boys, you got to take the risk.
Yep.
But this idea here, they talk about stable coins and the fact that there's a run on reserves and that the reserves aren't there and the stable coin can collapse. This is very important to understand this with regards to what happened with the 3 failed banks in the United States and maybe the 4 failed banks and what happened about this. And I hope people can follow. In the United States, when you take your money and you put it in your bank, the bank takes that money and they lend it, right? And they put it out into the world to be lent, and they use that the difference between what they pay you for your money, which is like 0, and what they charge for the loan, 1%, 2%, 3%, 4%, 5%, is their revenue. They play the spread. You give it to them, you get nothing, you get 1%. They lend it to maybe a small business for 5%. Somebody buys a house for 7%. Or which the majority of the banks do in the United States, is they buy the world's safest investment, which is called U.S. Treasury bonds. They got a 2-year, a 5-year, a 10-year, 30-year T-bills, right? What happened, it would cause the bank collapse very quickly in the last 18 months, is that the banks would basically take your money and they bought the world's safest investment, which was T-bills, by the hundreds of billions of dollars. So when they bought these T-bills, they were paying you literally nothing, maybe 50 basis points or 20 basis points or whatever, but the T-bills were paying maybe 50 basis points, and they're paying you nothing, or maybe 1 basis point or 10 basis points, and they're playing the spread. When the Fed raised interest rates, when the interest rates go up, the value of bonds go down. So the value of the collateral, which they have to hold by U.S. banking law, as collateral, as treasury bills, lost 30% of the value. So the safest investment in the world, backing your money that the bank used, right, to take your money to make money on was T-bills, they lost 30%. So that's where Silicon Valley Bank, all these other banks have lost literally hundreds of billions of dollars because they bought U.S. T-bills and the money behind the money collapsed. They lost 30%. So they're talking about stable coins here are not backed, and therefore, since they may not be backed by solid assets, they could lose value. Well, that's exactly what's happened in the U.S. banking system in the last 2 to 3 weeks. The banks have taken your money, they bought T-bills, which is the safest investment in the world. They've lost hundreds of billions of dollars on that investment, and the banks are collapsing. So don't tell me about how bad a stablecoin is. And a plug with regards to Caitlin Long, if you know who she is, she's a big influencer here in the United States. She has a thing called Custodia Bank in Wyoming she's been trying to launch. She and her bank actually wanted to hold U.S. dollars, not T-bills, 100% cash. For every dollar in, they kept the dollar. They didn't go buy T-bills. They didn't make loans. And the U.S. regulators recently ruled on her that the FDIC, our banking regulator here, said she was too dangerous to give a banking license to, where her bank wouldn't even invest in T-bills. It would have invested just in U.S. cash. She didn't get a license, but all the other banks did. They lost 30% buying T-bills and all that. So this entire crux about how stable coins are dangerous, again, I get it. I understand Luna was bad. ALTCOIN. You got U.S. Tether that's got U.S. securities. You got Circle with U.S. securities. But they're no different than U.S. banks. They're buying the same securities that banks are. So to make this analogy that it's bad, the only thing that I have to agree is obviously algorithmic stablecoins are not as safe, and we know by Luna that it was bad. But they're using that to paint all stablecoins and all cryptocurrency, where the reality is they're no more riskier than what our banking system is, because they have the same exact assets backing the deposits. They're no different. No different. And the one bank that wanted to do it, they wouldn't give a license to. That's how corrupt the system is. It's horrible, right? Horrible. So
fiat currency, it's like Animal Farm, was it? Fiat currency good, cryptocurrency bad. Fiat currency good, cryptocurrency bad. We just have to repeat that mantra.
Yeah. I'm going to go through this because they talk about now about Tether. They do talk about this, and this is kind of interesting, about how you can't redeem Tether or Circle for dollars. And they're right, you can't. And it would be interesting, right, if you could, right? This would be interesting, whether or not you could actually redeem them at 1 for 1. You can do it indirectly, right, through, like, let's say Coinbase, right? You could sell your USDC and get dollars, or sell your Tether and get dollars. It's kind of indirect through the exchange. But so that's kind of an interesting point. Again, I mean, there are a few things in this that I think would kind of make some sense. So I'll give them that. Now we're starting to get into basically the tail end of this report and getting to where the meat is and where we're going with crypto in the US as far as I read this report goes. Of course, here's the big thing. Crypto assets can be harmful to consumers and investors.
Yes.
So is walking out your door. You could get hit by a bus.
You should wear a mask. I don't know
exactly what that statement means.
We need the banking system. We need some sort of mask to protect us from cryptocurrencies. We need to keep socially distanced from cryptocurrencies.
Right. So we start to talk about how they can be harmful. Okay. Yep. So is investing in your bank. You had a bank here in the United States backed by U.S. Treasuries. You lost your ass. Oh, well, I guess they forgot to say how U.S. banks and crypto assets can be harmful to consumers and investors. They forgot that part of the sentence, right? But I think this is now really, really interesting here. However, participants in the crypto industry are not acting in compliance with existing laws and regulations. Now, Rich, I'm going to ask you, why is that?
Well, that's I'll tell you because well, I don't know if this is the answer to the question. I know for a fact that no regulated financial organization like Enron or HSBC or Goldman Sachs or JP Morgan have ever done anything illegal. They have every single time acted in compliance with existing laws and regulations.
Well, that's not exactly the answer I was going for, but that's also a good look. The answer is here, not acting in compliance with existing laws and regulations. Why? Because we don't have it in the United States. We don't have it. There is none. We have enforcement, but we have no regulation. The SEC going after Coinbase, going after Binance now, going after the Gemini guys, right? We have enforcement action, but we don't have regulations. Everybody in the industry, of course, the BPSAA, right? Talking about our association. Everybody in our association wants to play within the rules. We want to be compliant. We want to be above board. We want to be transparent. But there isn't any rules. And this is now where I'm getting frustrated as an American, realizing that this is actually part of the plan. There are no rules. There are no rules. And we're starting to get to where the U.S. is going, right? So this is now the theme. Nobody's complying with the rules. And I would tell you, as an industry insider or whatever, there are no rules. We want to play by the rules. You will not give them to us. And guess what? There's a reason for that, right? They talk about BitConnect, a couple of rug pulls, which I get. Bad actors. It's not the technology. It's not decentralization. It's like what was that OneCoin or WorldCoin, where that girl from Bulgaria?
OneCoin.
Yeah, all that, right? I mean, you're going to have that.
There's also Bernie Madoff coin.
Bernie Madoff, right? Same.
Enron coin.
Right. I like this. They talk about, furthermore, there could be conflicts of interest in crypto assets platform. For example, some crypto platforms combine exchange, broker, market making, clearinghouse. Vertical integration product services long been prohibited in traditional markets and leads to customer risk. Guess what? We had the split between depository banks and Wall Street banks, but now those have joined back again, right? And there is no wall there. So to be able to say this again is a false flag because we don't have that in traditional banking.
Yep, they got,
right? So to say
got rid of that.
That's again, it doesn't exist for the traditional system so much, right? So again, a kind of false flag. There's been limited economic benefit to DLT technology. And they talked about the Long Island iced tea guys as an example. I don't know, Rich, do you know about the Long Island iced tea company?
No, but I'm just looking at the time. December 2017, that was the bull run. And so people were just FOMOing in. And what it said is that they added blockchain made no difference to their value, to the business, but the stock shares tripled. Well, that's just people just FOMOing in into the bull run. That's all.
Right. And by the way, that was a publicly traded stock. It had nothing to do with cryptocurrency. But yet they're saying the DLT has no technical benefit. What the hell does an iced tea company have to do with blockchain?
Yeah.
Nothing.
Really poor example. Really
nothing. They're not even related. But yet they're saying that the technology is no good because an iced tea company in New York put Long Island iced tea blockchain to its name. Therefore, the technology doesn't work. Again, you couldn't make this up, right? So, of course, our major news agencies here, CNN, MSNBC, leftnews.com, whatever it is, it's all saying, oh, yeah, look how bad it is. DLT doesn't work because of iced tea.
Yeah. But there's so much. The arguments are so weak. Like the arguments against ivermectin and vitamin D, Russiagate, Ukrainegate. The arguments against why we can't have peace, negotiate between Ukraine and Russia. Weak. Carry on. Sorry.
It doesn't even exist. Now they got some guy named Bruce Snyder that said cryptocurrency assets are useless. So since we had a cybersecurity expert, and I looked this guy up, the Schneider guy's written a few books because I didn't know who he was. But since he's a cybersecurity expert, he called crypto assets useless, so therefore it must be true.
Yep.
Okay,
that settled it for me.
That settled that, right. This was interesting here, and I know about this. I was involved indirectly with the Walmart project up in Canada. They were the first one to use blockchain for settlement, right? Like Ethereum and smart contracts. I think they used the JP Morgan, their version. I forget the name of it. They had an Ethereum fork that they used. What was interesting here is, again, not explaining the technology here. More than 600 virtual machines to securely store and manage the data from thousands of transactions on Hyperledger. That was it. Implies that each VM at a maximum is handling 17 transactions a day. So therefore, you took all the transactions for Walmart, you put it over a virtual network they built of virtual machines to support the blockchain, and then you divide the number of transactions by all the virtual machines, and therefore, they can only do 17 transactions a day. No, that's not what that means. They don't divide the transactions over the number of virtual machines. They could have built a network with one machine, or two, or n plus 1, 2 plus 1, 5, 8, 10. They use 600 because they're trying to replicate a public blockchain. But now the inferences here is that the transactions on a blockchain are 17 a day. That's all you could do. So if you're going to have 1 million Visa transactions, you would need 8.4 billion virtual machines to process that, because each machine can only do 17 transactions a day. It can process one transaction, less than a transaction an hour. Very inefficient.
That's so bad. That is really bad.
Yeah. And
And
if you didn't understand the technology, you go, oh, well, I read that from the president. It sucks.
Yes. And actually, I recorded an interview yesterday with Dan Weinberger from Morpheus Network. And they actually use blockchain. They launched in 2018. They use blockchain for supply chain logistics. And their technology is so good. Argentine government is using it. There's a big supermarket chain in Canada that's using it. More and more projects. And there's more cryptocurrency projects like that where companies are using blockchain solutions because it's way more efficient.
Yeah. Anyway, let's keep moving because I know you got a timeline here. We're running out of time. Of course, they had to throw FTX into it, how bad it is, FTX, because they were the biggest donors to the Democratic Party. So we got to throw FTX under the bus. And the problem's FTX and blockchain, not us for taking the $40 million to all our campaigns, blah, blah, blah. Reserve, just experience notion, regular liability, no financials. Let's see here. This guy talks again about, I thought this was interesting. when it comes to trustlessness of blockchain, Snyder notes that blockchain does not enable the need for trust, but simply shifts the trust away from individuals, institutions, technology. You're right, it does, Mr. Schneider, whatever your name is. But more importantly, and the big takeaway they don't mention is the technology's transparent, where individuals and institutions are not.
And
so I much rather would have the technology than the institution or the individual.
Yeah, and it's neutral. The technology is neutral.
Right.
It doesn't care.
Right. But they don't mention the fact, right? They don't talk about that, right?
Yep.
So trustless blockchains suck because they just shift the trust to the technology, which is transparent and neutral and doesn't care, versus individuals and institutions that can manipulate it, right? Yep. So again, they also talk about identity, and I think, which is interesting, blockchains are often poor fit for purpose because the use of identity is needed. But guess what? With blockchains and the technology, rather than the central institution owning your identity, with blockchain technology, you can own your identity. Again, they're using identity in the context, it's bad for you to own your own identity. It's better for them to own your identity, right?
And
complete paradigm shift.
I think this will fit into a much larger picture of pointing us towards centralized CBDCs, centralized digital currencies.
Well, we're going to get to that here in a second, right?
Yeah. Now, we've got 4 more minutes, and just want to warn you, and because I want this announcement as well.
Yeah. So talking about centralized open source managed by entities. So, and they start talking about risk of financial innovation. Humanities result from cryptocurrency systems. We just had the run on the banks, which invalidates their entire argument. And I'm going to now kind of rip to the end here. But they did say risks apply to crypto assets examination. Many of these risks are not unique to crypto assets. You're right. They're not unique to crypto assets. They're also the same risks with any asset investment class.
Yep.
Okay. Thank you for saying that. You're right. It's not just crypto, even though they want you to believe it. They talk about leverage in exchanges and all that. You're right. You go to Binance and get 101 leverage. Maybe the average bozo shouldn't be doing 100 to 1, right? But you can. They're not going to protect you from yourself, right?
No. There's no protecting me from myself.
Yeah. DeFi platforms act on unregulated bank broker exchange to enter identities subject to regulation to be operating compliance. They want to try to be able to talk about the fact that DeFi and the technology is unregulated. And this, I think, is for another topic. But they started to talk about how they want to go after DeFi and how they want to regulate it. Oh, my point here was, if DeFi contracts, and this was my talking point here, are going to be regulated, and DeFi's code and it's written, therefore, what you're really talking about is the regulation of free speech, because DeFi's code and it's written and it's published and it's out there. So now they want to regulate speech. Believe it or not, that's what this says. This is talking about the only way you can have a regulatory over DeFi is to stop the publishing of it, which is now infringing on free speech. So now they're even going to turn this into a free speech argument, a financial free speech argument, because DeFi is not an individual; it's published code, and that now is basically speech.
Yep. Indirect
hold here, very dangerous, right? All right. Talking about financial crypto could be used for illicit activities.
Well, that's never happened with fiat.
I know, same thing. And by the way, of course, we know now with blockchain transparency, a lot of these guys that were using it for ransomware, they've pulled them back. They've traced them down. They've stopped them because of the transparency, right? The idea that some of these weren't rolled back is not true, right? They don't mention that part of it, right? So again, fiat is, US dollar has been used for drug running, laundering money around the world, blah, 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 blah. And to be able to say that you can use crypto for it, so can you use with a suitcase full of dollars. No difference, right? All right. Now, talking about the CBDC, Federal Reserve, maintaining the integrity system, a discussion of possibility of central banks. Now they're starting to talk about a CBDC. And now we're going to cut to, we have this new FedNow system that's launching this summer, right? Mm-hmm. We're having our first instantaneous payment system in the United States. It's going to be released this summer. There's not a lot of information out to the general public yet, but it's the first step towards the CBDC. And now I'm going to get to the very end, because we're coming right down to the minute, Rich, about where this paper goes. And it's the very last paragraph of this. I'm going to jump conclusion. And here it is. It says, crypto assets appear to be here to stay, but they continue to cause risk for financial markets, investors, consumers. Much of the activity in crypto asset space is covered existing regulations, and regulators are expanding their capabilities to bring large number of new entities under compliance, blah, blah, blah. Other parts of crypto asset space require coordination by agencies, deliberations about how to address the risk. The bottom line is this, is we have no crypto regulation in the United States. We have enforcement. And right now we have the CFTC, we have the SEC, we have the FDIC, we have the Department of Treasury, we have The commercial code we talked about earlier. There's probably anywhere between 6 to 12 federal agencies in the United States and state agencies, maybe even more, that could play in the regulatory environment. There is no regulation in the United States, and there will not be anytime soon. And that's the takeaway from this paper. They do not want a regulatory environment because when you read here, the last paragraph, innovations is fed now, and the potential USDC could help bring the U.S. financial infrastructure and digital era to a clear, simple way without the risks or irrational maneuver brought by crypto. Hence, continuing investments in nations' infrastructure have potential to offer significant benefits to consumers and businesses, but regulators must apply lessons civil learn, blah, 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 economics principle. The bottom line is this. They are going to not allow cryptocurrency in the United States, not by outlawing it, by not providing clear regulatory guidance and framework to operate legally. They're going to continue to have enforcement with no regulations, so you never know what you're going to get hit by because there is no regulatory framework. And at the same time, release their own this new FedNow and a CBDC and their own crypto-style DLT technology, whatever, into the United States and force everybody onto that system that has crypto-like attributes, but is run by the government, including being able to turn off your money with the CBDC like they did with the digital renminbi. They can turn it on, they can turn it off, they can make it expire, they could withdraw it out of your wallet. Who knows what they could do with that smart contract technology? But the takeaway is this, and you heard it here first. The United States approach for cryptocurrency is this. They will not make it illegal, but they will not provide a regulatory framework by which people that want to operate legally in the United States will be able to navigate the waters. And they'll make it so treacherous and so dangerous and so cumbersome that people will not use the technology and by default will gravitate to the federal U.S. system, and that's the way they want to go. That is where we're going with crypto. They won't make it illegal, but they won't make it legal either. They'll keep people guessing. They'll go after people they don't like with enforcement action, and they're going to force everybody into this new system. That is where we're going. It's right here, the last page of Section 8 in black and white. Read it yourself.
Yep. Chris, thank you so much. So the idea will be to squeeze people out in that space and then direct them towards CBDCs. Okay, Chris, I'd love to talk to you some more, but I got to go. I got a dinner date, right? Thank you so much for all the work that you've done in setting this up. Send me the links. I'll have them in the description below. This will go out a clean version, clean recorded version in a few hours or tomorrow or something. If you have any
I'll post my PDF with the comments in it, and people can download it directly. That way they don't have to try to extract it out of the main document, and they can share it. They can send it to people. They can read it. They can make their own notes and have at it. But I think it's extraordinary for people to see it in black and white. We're not making this up, right from the president's office.
Right. Chris, thank you so much.
Thanks
Comment questions in the description below. Please subscribe. See you all soon. And go check out BPSAA.
Good job, Rich.
Next, please keep filling your pockets with freedom. Crypto Rich and Crypto Chris signing out. All the best. Bye-bye.
Yeah, brother.